Hello everybody, this is Bulldozer Investing. Today is March 2nd, 2021. It is 4:47 p.m. Just wanted to give a quick update on the market. I'm just going to review the indexes and a couple of stocks that I had in mind to go over. This will be a quick video analysis compared to our, long detailed ones. So looking at VIX, let's go ahead and analyze the daily. Seems like it couldn't break over this cloud line. Let's zoom in to see what's going on. So we said the 30s will be a resistance and it acted like one. And this was a major fallback. It is holding on this trend line. So this trend line was, as we drew way back, it was acting as a resistance for, quite some time, maybe a week or so. And it finally got over and then hit basically the cloud top. It was a quick wick and then it just bounced down and it's holding this trend line now. So in order for markets to run up further, I think we need to break below, let's take a look, around 23. When we break down below 23 for VIX, I think the support is going to come around the 21, exactly around 21. High 20s, low 21s, that's where the support is. It did hold and it did do a good job holding the 20-day moving average on the daily. So this yellow line would be the 20-day, and it seems like resistance will be at 9 and it closed right on the 9-day moving average. Okay, so that's VIX. Let's take a look at the shorter time frame for VIX. Like an hour chart would be fine. As you can see clearly that on the hourly, how accurate we are with this, and it's rounding bottom. If we do see another spike tomorrow in the morning, VIX could run up to 26, which is basically the cloud line here, and the bottom of this, bottom of these candles right here, and the top of these candles. So it does totally make sense. I know the 50-day looks like a resistance on the hourly, which is 25.39. I think it could run up to 26.50s or 26.20s, around there, right? And then quick come back and test to see if the support really holds or not. I could see a higher low as a, double bottom on the hourly. Let's go ahead and do an extension on VIX. This is of course the shorter time frame. Now, oddly enough, this yellow box, wherever that's coming from, is basically right on target with what we've drawn. So I'll just put it here. So I was kind of off. I was thinking that we might be able to touch the cloud, but worst comes to worst for the markets, of course, not for VIX, but for the markets, this red line that I drew basically is still about the same thing. So worst comes to worst on the hourly chart, we might go ahead and test the bottom of these candles right here. So that's basically 27.70s, or the bottom of these candles right here, which is the cloud line, which is 26. So you're looking at 26.20 to 27.70s. That range, VIX can spike, but if the markets have to run, VIX has to break down 23. That's what I'm guessing. So let's go ahead and analyze SPY next. So this will be the hourly chart. Let's switch back to the daily. So you can see a long rising wedge. We have two lines here, the midline, the bottom, and the top. It seems like, although it seems like a bad day today for most of the stocks, this run from yesterday was tremendous. So it kind of looks like an inside day to me, honestly, if you count the body of this candle. I know there's a huge wick, but just disregard the wick. The body of the candles are basically inside. I think we're going to run up to 394. That's again, technicals, you can only see the indicators and just make an educated guess. What I think doesn't have to happen. The MACD still is bearish. Stochastics is recovering. RSI is just slowing down. So I don't think the run will be permanent. So it's either we're gonna test 394 or just have another like 2%, 2.5% and test 400. I think we're gonna come down further from that. Until this seems like a very critical spot right here. So you see the top of these candles, okay? So 390s, 391s, that's very critical. And then we also have to break this trend line right here, okay? So if we break out clearly, that's good, but this is kind of concerning. A lot of action going on between 381 and 390. So we need to clear that 391, this 50%. I'm sure that we'll clear it and hit 394 and then come back for the second bounce. Okay. So next up is QQQ. Let's take a look at what's happening in NASDAQ. Honestly, I was so busy, I didn't even check the market. Kind of playing long, so I don't really care about the short-term turbulence here, as long as you're positioned right. So the MACD here, um, it's moving faster than SPY, so it's still bearish, but the stochastics is reversing. Again, the RSI looks almost very similar to SPY, but still not ready yet until we get this cross. And sometimes you'll get the cross, you'll run up, and then bam, you'll go down again. So even if the MACD crosses over, the stochastics and everything looks perfect, we have to look at the overall picture and the fundamentals. That being said, right now, QQQ is testing its resistance, and the next resistance will be, what is this number? I'll just go ahead and aim at it. 326, let's say. So 326 will be your next resistance. I think what will happen is, I'll go ahead and quickly draw my theory here. So you see this. I'll also go ahead and make this custom pen because it seems like it's too little. Custom pen. Okay. So you see this 1, 2. So this is very critical that we don't play head and shoulder. So most likely what's going to happen is we're going to run up and this 50% Fibonacci has to hold. So the current levels, after we run up, the current levels have to hold and we have to get the next run. Okay. I like this support right here and also the cloud top support. Almost like the last couple of weeks we got that cloud top support, which is good. And it makes me worry less. But then the head and shoulder play could work out. We'll take a look at the weekly to see how the picture looks. Very similar to SPY again, we're seeing some resistance. We have to break out. We have to break this resistance right here. If we can't, you could have a possible head and shoulder as we mentioned. And we'll take a look at that level. So the level of 330s, we need to break above that clearly. Okay. Right now, if we look at the weekly, a lot of people were hyped about yesterday's action, but honestly, I wasn't, because I know that these kinds of runs, the next day it becomes, a slow day, basically. I mean, the volume didn't come as much as yesterday, which is good. But then this is the issue, right? When stocks go up 2.5%, people think these are the indexes, by the way. People think we're going to have another 2%. No, stocks usually, again, the ETFs and the indexes, usually if you get 12% a year, that would have been considered good back in the day. So people are thinking we're going to get 12% each month. So that doesn't work out like that unless you see some huge crashes just like Corona, then yes, maybe. But yearly, 12 to 15 would be a great achievement. So 2.5% in a year, in a day, that's like 2 months of a gain. And these candles are pretty huge on the ETFs and indexes. We're just not, and this is the weekly, by the way. So whoever gotten used to the stock market or entered the stock market on from last year and on, this is not usually what happens. Okay, you either gain 1 to 2%. 2% a month would be great on the indexes. So we gain that in one day. Of course, you're going to lose some back. On the weekly yet, the candle isn't formed yet, but at least on the weekly, we can say that the 9-day moving average is a resistance. Now we break over. Now nothing to worry about because this is the second day of the week, so nothing bad yet. Worst comes to worst, we're going to visit down 308 as we mentioned on our last review at the bottom of the channel and then run up. So when you see another like 2% or 1.5% down day, don't freak out because again, the protection from the bottom of the channel, and the 20-day, I'm sorry, the 20-day moving average has been a pretty good support since lately. Okay, since lately meaning last September. And then the thing is, we haven't revisited the 50-day since last September or October. Oh, I'm sorry, did I say September? September we got close, we ran up, and then we came back on October, at the end of October. You see this run? So we might do something like this, like tomorrow will crash, and then the next 2-3 days we'll have a huge candle. So we don't know how this, the opening of the week is probably about 271. So the opening of the week would be 318, I guess. So this, even the opening actually tried the double bottom on that week. So we don't know how QQQ is going to react. We can get a higher candle and fill the gap right here at 330. That's where the level I said was very critical, and we need to break above that. Now, my theory is that we're going to hit 351 eventually in the next couple weeks. But again, the 9-day moving average is a resistance that we need to take over. Next up is Dow. So let's do diamonds here. Dow looks okay, actually. I mean, I thought that Dow would come down a little and QQQ would have its run. Dow didn't. You see yesterday's candle, Dow did get a support at 9 days, so it didn't hit the bottom of the channel, which I thought would be a great buy. Came back and run up today. I mean, it finished the day negative, but it finished the day. I mean, this is the weekly. I'm sorry. I was getting confused. I was like, I thought Dow was down today. Let's take a look at yesterday's action and today's action. So yesterday it didn't move up as much as, you know, your QQQ and SPY, or the Russell, but it did contain this inside day again candle, and the 20-day moving average has been a good support. Airlines, cruises, transportation, energy sector seems to be okay on this fall. So let me go ahead and show you some of the names here that I have, right? Look at the airlines, cruises, they finished the day positive. Ford, of course, moving up. What else is there? United Airlines, a little bit of red, but not bad. Where did my oil sector go? Halliburton and the rest. Yeah, Halliburton finished negative. Oh, the energy sector, so Exxon, Halliburton, Caterpillar. So these are some of the Dow giants here, especially Exxon. Finished the day negative, but the airlines and cruises, the transportation and entertainment system, or entertainment pleasure or travel stocks, they're all doing good so far. I think that's what's helping Dow not to move any further down. Okay, so that's my Dow, and I think Dow has a resistance on 316 on the diamonds. I don't know the exact Dow Jones number, but you'd have to do some math for that. Next up is Russell. Oh, I'm actually typing Russell. I'm sorry. It's holding the channel pretty well, I can tell you that. Looks bullish, and it looks very similar to what we've seen in QQQ. It needs to break above 226. Your next resistance level is 228 and 231. Actually nothing different from our last drawings. I mean, we did have a huge update, but look at this resistance, right? So I don't know if this is going to be a megaphone type of thing, like if it's going to crash down and get a support at the 50-day moving average. We've seen this in QQQ. We've seen this in SPY. It's kind of forming a megaphone. If you ask me, it might get a cloud at 208. We talked about the possibility of this move at 208 from our last review. So 2 days didn't really change anything on the technicals. I can say that this resistance is pretty solid. So right here. So unless we break this and we have like a couple more resistance levels, my target didn't change, 240. But again, the technicals will not work if we break down this channel. So you have to watch out the 221 level. If we break below 221, we could go back and revisit 50-day moving average, or even hit the top of the cloud, which is coinciding with a Fibonacci extension level that I have before, which is 208. Okay. So yes, it looks okay. It looks like it wants to recover. The candles don't look that bad. It seems like there is some, defense going on, but at the same time, attack on the bears on this side about 226 level. So it's working very technical, but again, Watch out for 221. If we close underneath it, that's going to drag us back to 50-day moving average on the Russell. Next up is Apple. Again, a huge day for Apple yesterday. What did it do? Like 6% yesterday, if I recall right. Again, I couldn't check the stocks yesterday as much. Usually have the numbers in my head, but I think it was a 6%. And at one point, it did go over yesterday's highs, which is good. It basically what it's doing is 100-day moving average support. 9-day crossed. It tried to go over the 9-day and the cloud. Apparently, it just got a support at 100 and closed right there and finished below the 9. So the next day objective, again, it might hit the top or the bottom of the cloud right here, or this top of the wedge. So let's go ahead and draw, and this is kind of zoomed in, huge picture, but I think it'll help if you're watching on your phone because I just zoomed in a lot. So this is Apple. You see this line right here. This is the wedge, the top, and this is the bottom of the wedge, right? So one thing we could do is hit this wedge and come back, or basically hit the cloud top and come back, which is about the same, like maybe 50-cent difference. So I see a support holding here. So we come back and bounce, that will be healthy. Let me redraw that. So this would be the bullish case. Yesterday, or tomorrow, I'm sorry, we come back and test this level slowly and then run up, okay? But this is, again, a resistance right here, the Fibonacci extension resistance. Another possibility is that we could just drop lower and get a support in this fib range, right? This range right here. So anything is possible with Apple. Don't get hyped up about yesterday's action. And a lot of people have written messages from, or private messages from Twitter. They're like, oh, you know, we're going, I think we're good. FUBO's flying, you know, 15%, 20%, whatever, right? So I don't look at the daily action a lot. You see one day you could be up like this, and then you get all your gains, lose 70% of your gains the next day. So don't worry about these, you know, little actions. You know, you go up and then down, bam. So all of these 1, 2, 3, 4, 5 days that you're happy about takes 2 days to come back to where you started from. So it might take a day to go back to where you started from. So I'm not negative about the market, but I'm not positive about the hype that happened yesterday. Okay, just keep that in mind, because we don't recover in 2-3 days. This will take some action. I want to see some bottoming formation on Apple, and I want this level to support. So we go down, come back down, come back down, come back down, come back, and have maybe a higher low, then I'll say, okay, we're going. But right now, these violent spikes up and down doesn't tell me anything. So I'd say I'd probably hold right now with Apple until we clearly go inside the cloud and break 130. I'll be a buyer above 130, but I will not be a buyer at this current level unless I see this 100 moving day average being a good support, or the 121s, the 118s again. But just as the drawing that I mentioned, right, bouncing up and down till we get this curling bottom. You see how long it takes? Up, down, up, down, up. It gets you tired because you're sitting at a critical, you know, resistance line. So we might have like up, down, up, down, up, down until you break above that. You know, don't get sucked in within the 3 days. You want to make sure you give it a week or two. Just slowly position. Next up is Boeing. Reason why I'm doing Boeing is because I don't want to cover all the cruise lines, airlines. You know, I think Boeing kind of is like an index for all of them in a way. Their charts are very similar. As we drew this red line last time I review, as you can see again, closed underneath it, closed underneath it. Both of the days it tried to break out. If you watched, I had a very detailed video about Boeing, and I told you that this is not the action I wanted. So I'll draw again just to see, but I think that video, it was like long video and it didn't get watched a lot. You know, I put like 2 hours into it. A lot of people think like I'm doing a lot of tickers to get views. No, they don't really get watched a lot. They're like, you know, max I'll get watched is like 1K views. So I'm not going to sit down and waste 2 hours to get 1K views. Doesn't do me any good. Just doing it for passion. But I just want you guys, and if you're one of those people that actually watched it, you can see how correct I was on this red line. And I said the scenario that I don't want is going straight up next week and trying this and then go back. That's not a healthy recovery. What I did want it was get a support, resistance, get a support, resistance, flag, resistance, support, and then go up. Okay. So that's the action that I wanted to see. But what happened was, and I said, I don't want to see this, because what will happen is, and this is usually what the market makers do, is they'll run it up, sell it at the resistance, and all the suckers, all the retail suckers are here buying it, thinking that they're going to go to the moon, and then they'll go ahead and you see this 100-day moving average, it'll probably curl up here on the Fibonacci support line, extension support line, and what the smart money will do is then buy it right around here when people freak out and sell. So they'll just recollect their shares cheaper and then run it up slowly and but for surely. My long-term target on Boeing was 250, so around this yellow box. And for me to go long on Boeing would be somewhere around here. So it's forming a pennant, right? You got to watch this pennant. If it breaks out and closes a couple days above this red line, then it's good. But it seems like the red line has been a dead spot for now. And it might get a bounce back at 9-day moving average and then go within this pennant. Just watch this pennant, see how it works out, okay? I wanted to do a review on NIO as well because the huge drop, the shock, everybody expected a lot of things from earnings. I did say that the chart looks good, but in one condition, you don't know what the earnings are going to be like. And I never will do technicals and say, okay, the earnings were going to shoot up. No, I stay away from earnings because the technicals do break down. And you see this here that, great recovery, great bounce off the 100-day moving average. But then again, what happened here was a technical breakdown because of earnings. Now, I didn't check the earnings report. Some people say that the cash position was good, blah, blah, blah. I don't really do fundamentals. I'm not the smart guy here. The people who do the fundamentals, the analysts, are the smart guys, the mathematicians, and they do all these things. But at the end, things go the way that there's, NIO was $1.30, and those analysts were saying that NIO was going to get bankrupt. It was having a hard time finding 1 billion, blah, blah, blah. And look where the stock is right now. It hit an all-time high at 66.99. So $1.30 or $1.17, I think, was the lowest, to $66.99. So I don't do that math. I only do the technicals here. But a lot of people ask me, how far can NIO go? We don't know how far can NIO go, but I can tell you one thing just looking at the chart, right? There's historic levels. I'm not a magician here. Like I can't really tell you. I don't have the magic 8 ball to tell you where it's going to go. But what I could tell you is that looking at this candle, look at this candle, the bottom of this candle, bottom of this candle, bottom of this candle, bottom of this candle. So you're looking at a lot of bottoms here. Okay. So I'm sorry, I should have started from here and just put the bottom here. Yep, there you go. So the red line here indicates that $42.10 could be a support. If it breaks down from there, your next support line is going to be the 39.50s. Now, I'm not saying it's going to go to 39.50. I'm just giving you levels to watch because I'm not going to sit down and watch. And no, I mean, honestly, I was super bullish on the stock on the chart because of the formations that I kept, describing here. That, this is the dragon, the flag. It looked bullish, but it couldn't break this channel. It couldn't break this the downtrend. And I thought this looked great. And I thought that this looked great. Every time, NIO kind of surprised me all the time. So here I thought that this was good and it was ready. It couldn't break this trend. Okay. So then what happened was it just got sold off. Would I buy it here? I don't know. I might start with like small calls or something like that, but I wouldn't put too much money yet because again, I don't go in stocks until and unless I see a floor establishing. Now, does it fail? Sometimes, yeah, it fails about 30 to 40%, but 60% it doesn't. So here, as you can see, the bottom for me. So don't get into this run because again, I just wait and wait until the floor is broken. I might miss 10% or something on the run, but again, I'll rather be safe than sorry. So here we have another trend line. Okay. Now we might go like this, like this. So I want to wait till a floor is established. And that floor could be 39.50, that could be 42, I don't know. But those are the levels that I would be watching. You zoom out, you can zoom out to weekly and just see a lot of people are like, how come NIO is dropping? Well, NIO could drop because if I were to buy this, I said $1.17, it was $1.19. If I bought this at $1.19, I would sell before the earnings. I don't know. Like there could be a million reasons, but I mean, that's one of the millionth reason that, you would sell because you got it at 119 and it's like 60 bucks. Well, what are you going to do? Go figure. So looking at the weekly could drop a lot. On the weekly, you see this, bearish crossover on the MACD, stochastics, RSI, everything looks bearish on the weekly, the long side. On the daily, again, I was so bullish on the stock. Now, has my view changed since? It will all depend. If it doesn't hold the, especially this level right here, I remember it was like -15 and it recovered and it finished the day positive. So that level, that 39.50s, the 39.40s, that level has to hold. That's what I'm going to say. If it doesn't, then you're looking at 36.77, you're looking at 30.27, you're looking at 24.46. I know it sounds scary, but and I could draw an extension on the downside. So I want to spend some time on NIO because a lot of people have money on it and they want to see where the floor is. So 36.27, where did I say 36, or this line right here basically. So it's pretty close. You're looking at, so these two lines, 42, 39.50 and 36.22. Those should be the buying levels. If it loses those, that would be super bearish. I don't know. I don't think so because the institutions are in now. So I don't know. Like it dropped from $10 to $1. Would it drop from $60 to $6? I don't know. I don't want to speculate. I don't want to say something that I don't know about. But all I can say is on my technicals, your first level is going to be 42, second level 39.50s, and then 36.22 should be the last base for this stock. Next up is FUBO. Let's take a look at FUBO. Well, I want to see the after hour action, right? Well, basically nothing. Ran up to like 45, and then, I mean, before hours, it closed 41.89. Now it's 40.60, so more than $1 below the closing price. The earnings weren't that bad, actually, but we'll have to see. You see this, well, actually, compared to here, it says -2. I don't know. I have to check the earning call, right? What does it say here? Earnings, -53 cents. Actual, -247. I don't know what the earnings was about. Some people said it was like 100 million on the revenue. I don't know. I have to check. I wasn't really paying attention. I was busy. But then again, these companies are growth companies. The earnings don't matter much. So I like this action on FUBO that we bounced off of the 61.8. The 50-day was the 20-day moving average was basically the resistance, and the 20-day was, I'm sorry, the 50-day was the support. Now it acted as a support and is still acting as a support right now. I'm not bearish on it. I own the name. I will own the name. I'm long on the name. I won't sell it probably for a long time. Just to secure my position, I did sell long dated, like ridiculous, like I don't know, $70, $100 calls on August just to make sure that I have like cash on the side. But that doesn't matter. I sold it because it was gonna have a lot of premium for the earnings, and I knew something like this was gonna happen. I mean, I'm not like super bullish on earnings. Earnings are just, people selling calls, like institutions selling calls and getting the premiums, and then it'll run the next week. So I'm probably gonna buy back the calls that I sold today. Of course, no naked calls. It's covered calls, and then just buy them back and collect the premium. Maybe average. I mean, I don't know if I should average down. It didn't even drop that much. So that's the story here on FUBO. That yes, we broke above the cloud. Tremendous bullish signal. MACD here looking bullish, almost curling up. Okay. Stochastics is ready. RSI is picking up. Everything is good on the stock, so we're ready to go. And I was the one to tell you guys that this was the bottom. Second leg again bounced and then bam. Look how it goes from 33 to 45 after hours. It's seen. So this stock can move, guys. If it goes down hard, don't get upset too much because it just bounces back. I mean, this fall here, 1, 2, 3, 4, 5, 6 days, and then it recovered in 3 days. So that's FUBO for you. My first target is 50, then 54. I thought that if the earnings were great, we would have hit 50, but I guess I don't know what they declared. I didn't check. Let's take a look at the 1 minute chart just to see what happened after hours. So, I mean, not much. It's like, okay, it spiked and look where it hit. Look where we thought it would hit. And then it look where we thought it would bounce. Okay. So it's pretty much, I think I'm positive. Like these stocks, if it doesn't fall like -10, then if it stays neutral, then it's positive. I mean, it's a growth stock. I mean, we have the call here at, what is it? 5:30? What is 17.5? Yeah. 5:30 in a couple 9 minutes. So we'll see how the call goes. Some people, Zach Morris, and he's posting like, these you know, screenshots off of the you know, betting apps and stuff like that. I'm not gonna speculate. I'm not saying he's speculating. I don't research that kind of stuff, so I'm not sure if it's true or not. And a lot of questions came today from Twitter, from messaging. Is this true? What's going on? Blah blah. I'm not the official guide. Like I'm not a FUBO executive to say it's true or not, right? I don't have that kind of time to go online and search how true it is or not. Somebody posts a picture on it. It's not my duty to go ahead and, identify if it's good or not. So having said that, I think the earnings aren't that bad on FUBO. Um, it came exactly as I thought. I was gonna collect a premium on it, and I did, and I'll probably buy them back tomorrow. Nobody can say this chart looks bearish, guys. We're on a big pennant. The breakout is going to be much like Palantir, and I think we're easily going to see 67 and 88 eventually. People think I'm pumping the stock. Go ahead and check my Palantir videos on a couple of months ago before that huge run. Okay, it happened like that, right? I bought Palantir right here and it dropped, and the same crap happening to me again. I bought the stock right around here, and then it went down, and then it's going up, and then it'll probably go up and down, and then once it breaks out, it's going to be huge. I'm expecting at least 70 to 80% on my average, above my average. So we'll see how that goes, guys. Nothing technically wrong with FUBO. In fact, the bounce from the fib extension on the downside and breaking above the cloud and the 50-day moving average is awesome. Now the 20 will be a strong resistance, but if we break above this pennant, do not get happy because it will get a confirmation back. And it'll do it a couple times. So the first breakout will not be the true breakout. That's all I got to say. Again, super bullish on it. If I wasn't, my money is where my mouth is at. It might not be worth, a lot to you, but it's worth something to me, at least on the trading account that I have, on the income that I make. I'm not a millionaire, but again, I put my money where my mouth is, and I'm still on FUBO. For those who are not, with me here, I'll show you my trading account. Again, only thing I have is FUBO, 117 shares, sold some calls, and probably will get the premiums on it, even though it looks like I'm losing tomorrow. These are gonna have a ridiculous price because it was the earning premium. I did buy some of the calls that I sold last minute because I was thinking maybe if it goes up, like I don't want to waste my money. I actually sold like 8, then bought back five of them, break even. So I didn't want to risk it just in case. But that's what it is, right? I'm not bullshitting about what we have here. For those that thought that I sold FUBO or something, um, on my kids account, actually, on my kids account, my son's account, I also bought FUBO, some 500 some shares. So just to show you, I made the account for him just to show you that I'm not bullshitting when I say I have FUBO. I have FUBO. It might not be a lot compared to other people, but I manage a couple accounts for my family first. So the trading account for YouTube, my son's account, my daughter's account, I open all separate of these things, so that I can manage them differently and try doing different techniques to see what works or not. But again, there you go. That's FUBO. I have FUBO. I didn't sell it. That's the proof. I didn't even sell a single share. I did buy more. So that's what it is. Okay. Now let's go ahead and see what's up next. Next up is Palantir. So that was one of my stocks that, we spoke about Palantir just a few seconds ago, right? For those, yeah, this was the thing, right? I bought Palantir here, it dropped, and people were like, oh, you're bullshitting, blah, blah, blah. Same story, and then bam. That's what's going to happen to FUBO, and it's the same formation, just wait and see. So looking at Palantir, let's go ahead and fix this time axis. Looking at Palantir, it doesn't look that bad, actually. The MACD is still, not there yet, but it's good time to position that I think so. I had some Palantir on one of my other accounts, not that much, maybe like $10,000 worth. 9-day moving average is a resistance at 25.85. Seems like the 24.75, the 100% fib line here seems like a good resistance and a support at the same time. So I can't really tell what's going on at this moment. If we do sink down, we're probably going to see 22.68. But don't worry, Kathy got your back. So she's bought like 12 million shares within the last month. Within February, basically this drop. Before the drop and after, I think after the drop, and then right here as well on all her ARK-K, ARK-W ETFs. I don't think this is a bad looking chart. Now, I mean, it would look bad if you bought it here and here, but honestly, I've sold it somewhere here, and I got into calls on that drop, and I made like 700% on the calls, so I didn't miss much. And looking right here, that's another trend line. I would say worst case scenario, 22.65. Best case scenario for this week will be over $26, 26.50s. Okay. So that's here for long term, and I keep saying this, I have short term goals, but then I have long term goals, right? So I'll go ahead and do an auto zoom. If we break, so there's this two trend, let me go ahead and take a picture of it so you guys can understand what I'm trying to say. So we have a downtrend, which is bullish, okay? So down, up, down, hit the middle of the trend line. So this would be the middle of the trend line, right? And then down. So the next up will be nearly, what is this, like $29 area, bottom of the red cloud, okay? And it could come down all the way to 15. I'm not so sure. So we have to see the technicals once we're up in the next upper trend line of this channel. I would be a seller right around 30 and wait, even though my long-term goal is 55. I'm not a fool. Okay. So you got this right here. You didn't sell. And you're given a second opportunity around the same levels right before the earnings. You have to take that opportunity to sell because that's what people did. This is people selling before earnings because they knew what was going to happen. Earnings, I knew it wasn't going to be a skyrocket, to the moon type of earnings. And then the lockup expiration, all these people waiting for it to sell their shares. So it was kind of waiting. Like you know what's going to happen. So if you're given this opportunity, you unload. Now we're given this opportunity to buy off the lows, but then again, I'm no fool. I'm probably going to sell right near the cloud and wait. Long on the stock, but sometimes you just have to sell and wait for a couple of days, couple of weeks. It's okay. I don't mind getting it at a higher price if I know that I'm comfortable holding it. But why would I lose my sleep or take the risk of not knowing what's going to happen technically when I can buy it back? So you guys can say, oh, you just hold it long. You're going to make money either way. This is the thing. Let me show you. This is the thing. When you can sell at 42 and buy back at 50% cheaper almost, this is not a this is not a fool's play. Because when you're holding it here, I'm going to do a call. I'm going to buy double the shares and make another 100%. You are the fool. That's what I'm going to have to say. Why, take the risk when you know that there's going to be shares getting unlocked, earnings are not going to be that much, and you can double your stake and grow your position without taking a single cent out of your pocket. So you're here sitting at 50K total. You sell 50K. You can buy at 50K again, but this time you're doubling your shares. So if you had 1,000 shares here, okay, I don't know. Maybe you bought it at 25K, 1,000 shares. I don't know, right? Just making up something. So actually, 25K, 1,000 shares would be 25. Let me, 1 second. I'm really bad at math, as you can see. Let's say your cost average is 25, right? And you have 50K. So you're going to buy 2,000 shares. So you can have 4,000 shares at 50K. That would be getting your cost average to almost $12.50. If you got in here at $25 with 50K, your cost average is 25. You made 100% almost, not 100%, but like let's say 75%. And then you sell the 2K shares, so you had 2K shares, right? You sell them at 42 or whatever, and buy with the same amount of money, you double your shares. So then it would almost be like you bought them at 12.5. I mean, not really. It's not going to say you bought it at 12, but your initial investment, your initial amount of shares, and your initial investment and your added shares will have that effect. Okay, so that's what I mean. So when I get to this level at 30, 31, I'd sell my shares and wait and see what will happen. If it goes in this trend, so that I have another trend, right? Let me go ahead and delete all of this stuff. Just taking another picture instead of doing all this. Okay, so I have a second trend, basically this line, right? And you have the downtrend. So if you break above and you base on here, that's where, okay, I sold my shares at 31. I'm fine getting them back at 32 because I doubled my shares. I don't mind losing a couple hundred shares, like 100, 200 shares loss after the confirmation, because then I know I could sell them at a higher price. Okay, so that's the deal with Palantir. You have to watch this cloud action, the 30s and the 31s. So in my conclusion today, what's really happening is that Biden had said that we're recovering, blah blah blah. We got our last stimulus, so we get all the flu shots. one for each adult or one for each American, whatever you want to call it, right? Um, the, Fed's action is just a question at this point. So everybody's thinking, okay, close to zero rates, unlimited amount of Fed pumping money in the market. We partied, so now what's going to happen? We're recovering, economy is recovering, COVID is going away. So what's going to happen? That's why you're seeing all these, travel stocks going up, high growth stocks getting sold. Zoom, after a great run yesterday at $450, close the day 372. Peloton, again, another bad day. All this, Roku had a different reason. I think they're selling 1 billion worth of shares or something, whatever it is. So all your growth, high growth, coronavirus stocks are trending down. Things like, Teladoc, things like your, Moderna and Novavax, because the news is out. So it's a lot of people, and even some people in my family, I can't help them understand this. They're like, Moderna is going to make a lot of money because of the flu shots. You sell the news. That's it. People don't care Moderna is going to make a lot of money. It was a $25, $23 stock just last year. This is $150, $155. It went to $200 for the reason being that in the future they're going to sell a lot of shots or flu vaccination, right? Whatever, the coronavirus vaccination shots. So it was $25 and it hit $200 because that in the future they will sell them. Now the news is out. Now that they're selling, that's it. That's done. That's where you sell. Okay. Novavax was $3.80. It went up to $320. For the reason being is that they're going to sell a lot of flu shots or coronavirus shots. Vaccinations, whatever you want to call it, right? They're not selling the shots, they're selling the vaccine. So that's what we're seeing, the high growth, the ARCs are going down, Lemonade, all these, expected high growth stocks, Space, another, 11%. That's huge. Should have covered. I should have, I could have. It's a lot of stocks to cover and it's taking a lot of time. So I'm just going to skip Clove, all these spec, companies that converted. Clove might be a good company, but again, 12%. These are heavy hits. A lot of people got hit hard. A lot of people missed it. When I was screaming and telling everybody to buy SPR at $17, it was worth less than $2 billion. SPR at 70, and it's still cheap. It's a great company. 47, it's staying green. Why? Making parts for Boeing, making parts for Airbus, making parts for rockets, all these things, in the airplane business, in the space and aerospace business. Great company, low valuation, staying there. Okay. Uber is not going to go away. It'll be $100 stock buy within the next year. And it has a lot of depth. It's doing a lot of, research and R&D, so forth, right? It's a good company. That's what's going to happen. Uber is going to start making business. It's the future. You think of the future. Now, a lot of people are surprised that, things are falling down. It's because the trend will change. That's what the president just said. Vaccinations are working. We're going to get off. We're going to, a lot of people thought that Biden was going to have people stay home for another year. And in fact, your REITs, right? Your MITs and your other stocks, cheap buys. We're not going to stay home forever. Okay? Unbelievable. This thing was $1.46, dropped from way up 16. These are the things you just buy and forget for years. But that's what I mean. You have to think of the future. Okay? So that's it. That's my conclusion. That's my market analysis. I am going to go back to my construction. I probably posted a picture of my basement floors. There's only one room, so I have to make other rooms. That was a done, at least I had walls on that. So I have to, put the drywalls, paint, blah, 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 electric. Before I do that, electric wiring, all the lights. speakers, projector wiring. So a lot of things to do. I might just do another video maybe next Friday, this upcoming Friday, but that's it for me today, guys. See you guys on Friday.